Today we're going to talk about how to manage your trades properly, or how to manage your trades with a reason. And this is a video on how I personally created on how I manage or formulated this type of technique on how I manage my trades. So what is managing your trades? Managing your trades is, while your position is currently open, how do you manage it? Hence, how do you take partials? Do you trail your profit? Do you trail your stop loss? Do you change your take profit? When and how? And some other stuff we will talk about in a short bit. Now, this video is going to be short since I have a great spark of idea to create this video, since I'm currently on a situation where management is I manage my trades textbook, or this is a good example of how to manage your trades. At the same time, showcase some structure or identify proper / real structure. So don't be confused with the circles. These are just my reminders on our topic today. Now, so currently, as you can see on my previous video, I took a buy here. For the reason is, I'll say it again here. As you can see, we see structure currently doing from this swing point here to this swing point here, made a retracement to where? A more refined POI. We saw confirmation there looking like this, straight up Wyckoff, impulsive move, break structure. This is a little bit exaggerated, but tapped into a more refined demand zone, then rode it all the way down higher. So I had a buy limit over here, hence a very tiny 1.4 pip stop loss. So the current situation of this is I moved, as you saw on the previous video, we had partial zones here, partial zones here, partial zones here, and my take profit on this demand zone over here. I believe this is a 4R demand zone, as you can see. Yes, a 4R, as a 4R supply zone. So why do we want our take profit on that 4R supply zone is, as you can see, this is just a glitch, this huge wick. So as you can see, currently we're on a bearish move to the downside. As you can see, broke this structural low over here. So overall, the larger time frame structure is looking like this, and it could continue lower before doing a pullback on these zones to continue to the downside. Meanwhile, on lower time frames, as you can see, higher high, breaks of that, breaks of these previous low, lower high, lower low. Now we're expecting for price to tap on this very refined supply zone over here, then to continue to the downside, hence following the overall order flow on this specific or more refined time frame. So as you can see, we entered again, let's go back here, we entered over here, then as soon, this is where the management comes in. So let's do a replay somewhere. Let's just do a replay here. So as you can see, as soon as we got in, this is the Wyckoff I was talking about, or in other terms, break of structure, break of this structural highs over here, or liquidity highs, and tapped into a more, I believe, a 5-second demand zone over here. I was getting cocky, so tapped in there, tapped in beautifully. I was super lucky, but again, it's either luck or skill. Then we had partial zones here. So the reason why I had partial zones here is price. What price can do is tapped in, go a little bit higher, grabbing those liquidity high, then continue to the downside. Same thing with this one. Tapping into it, then continue to the downside, grabbing liquidity on the top side of this. As you can see, we have some resistance zones over there, meaning either stop losses or buy stops on the top side over here. Some people, what they do is, the more safer or the more probable thing that could happen, or what I mean by probable is, what price can do on a reversal is, again, tap on this supply zone over here, then reverse to continue to the downside. Same thing over here. Tap on this supply zone over here, then continue to the downside. As you can see, price did some reaction over there, but continued to the top side. Now, what other people do, I've seen, is they partial on supply zones, on the open of supply zones, or vice versa. So partial, they have your partial zones here. Then let's say we have a supply zone over there, or a supply area over there, partial on that open of that supply zone. Since price can tap into that supply zone, then continue to the downside. But for me, you get more losers by partialing on highs, but again, your RR is way more greater since it's more pips to the upside, hence giving you more better RR. So drawdowns over here, the pros and the cons. Again, if you use supply zones as your partial zones, then you have a higher win rate in terms of partialing and overall trades, including partials and trailing and break-even trades, and lesser profitability. So that's the pros of it: higher win rate, meaning lesser drawdown. But the cons are lesser ROI, return on investment, or percentage gain on your account. Same thing with this one. Pros of this one, using your partial zones on liquidity highs, is better ROI, return on investment, but again, lower win rate, because what price can do, as you can see, price reacted on maybe this supply zone over here. What if, let's just imagine that again, price, I've experienced this many times, since again, doesn't mean you use smart money, quote unquote, smart money, or institutional trading following the footsteps of institution or big banks. Doesn't mean we're following the big banks that we don't lose or have multiple break-evens or having losing streaks. Again, we're just retail traders. We are lucky that we know this type of strategy, or we have this type of concept in our arsenal. So let's just imagine tapped into that supply zone, then continue to the downside. I've experienced multiple times price doing that to me, giving me multiple drawdowns or multiple losing streaks, losing trades, or break-even trades. But again, it fits my personality, where partialing on liquidity highs is what works for me. So again, it depends on what type of person you are. If you want higher win rate, then you can target this supply zone over here. As you can see, price tapped into it on higher time frames. This is a single supply zone over here. Price tapped into it, then it could continue to the downside. But the cons, again, look at this area over here. This is, even though this is just like 5 pips spread, 5 pips on size, but again, since your stop loss is super tiny, let's just compare it over here. As you can see, if you partialed here, that would be a 8-to-1 partial, or over here, compared to this one, a 12-to-1 partial. So 4 RR more. So quite massive difference. And again, every time I partial, how I partial is, I partial 50% per zone. So let's say I have 10 lots, I partial 50%, so I have 5 lots remaining. The next zone I reach, I partial half of it again. So what is the half of 5 lots? 2.5 something. So I have 2.5 lots remaining. This is just for example. It's this other partial zone, divide it in half again. And vice versa on selling. So as you can see, why did I partial on this zone? Because again, price can tap into this. I believe this is a 1R, as you can see, 1R supply zone over here. Price could tap into it, then continue to reverse to the downside. As you can see, price tapped into it, broke those highs over here, then went lower. Now, the thing that could catch your eyes here on this video is, what I actually did is, as soon as I see a break of structure on this point, I then move my take profit on this part over here, another supply zone over there. Let me explain why and how. So remember that overall on EU, we are currently bearish. As you can see, order flow is currently bearish. Hence, I circled it, since we are overall in a bearish trend. higher high, broke this structural points over here, lower low, lower high, lower low. Now we're expecting a lower high on these zones. But even though we had this very beautiful, followed by a huge imbalance, also broke the structural points over here, grabbing liquidity, followed by imbalance, this beautiful supply zone. Even though price did not tap that supply zone over here, there, doesn't mean it's not going to continue to the downside. Now, what I mean is, it's not mandatory for price to tap a supply zone. I'm pretty sure if you have been trading SMC, quote unquote SMC, you know that price sometimes doesn't tap supply zones or demand zones. Just goes near it, then continue to the downside. Now, the possible reason is it's probably mitigating a larger zone. Now, what I mean is, this is a more refined supply zone, and this is a more larger supply zone over here. Price could be just tapping this larger supply zone over here, and after it taps, mitigates like the 75% of that supply zone, then it could continue to the downside. So there is reasons, hence building reasons what price is doing. So hence, since again, remember that we have a POI, our rules are structure, bearish structure, we have a POI, supply zone, then we wait for confirmation. Our confirmation is a break of a structural point. Now, when we see a break of structural point, now we can expect, why is it breaking a structural point? It's either a liquidity grab to continue to the upside or a little bit higher before going down, or it's a order flow shift for price to now continue to the downside, hence following the larger time frame structure, which I believe what EU is currently doing. So bearish structure. Now we go on way more lower time frames to see it more clearly. So I cleared things up. This was the 4R supply zone, this large zone over here, this red zone, that was the 4R earlier. As you can see, what price did, as you can see, higher high, higher low, higher high. What did price do? Break that the previous higher low. Now, why is it doing that? It's probably done mitigating these zones. Now, it's not mandatory for price to tap into this refined zone. Again, on higher time frames, there are more supply zones over here, or on even way more lower time frames, maybe somewhere here, supply zone, or just a imbalance where price reacted to now to continue to the downside. Now, what I believe is, since overall when we are in a bearish trend, this is not a liquidity grab. Again, I could be wrong. No one can predict the market. This is why we risk manage. This is why we have a strategy, since we are just speculators of the market. Now, since we see a break of that structural point, we are now expecting price to continue to the downside and break this previous lower low here. Again, I could be wrong. This is not financial advice, but according to the concept, or according to my strategy, this is now a order flow shift. Since overall, at this current point, we are all in an uptrend, as you can see. Higher high, higher low, lower low, since it broke the structural point. Higher high, since it broke this other structural point. Higher low, higher high, higher low, not a higher high, break that structural point, then breaks it again. So higher high, grabbing liquidity on both sides, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Now I break a higher low. Again, I could be wrong. This could be a liquidity grab, but again, I could be also right. This is why we have a strategy. Again, remember, we are creating reasons where what price might actually do, or what is the more probable thing for price to do. Hence, we are managing our trades. Again, remember, we are currently, imagine that it's currently still open. I believe it was somewhere here. Maybe here. Yeah, somewhere here. We have our position over here. So currently, we still have a position here. So this is how I actively manage trades. Let's say it's currently running. So somewhere here. Let's just skip it over here. So as you can see, now another question is, let's just hide this for a bit. Now another question is, how do you identify higher highs and higher lows? Now a great tool for me personally, what I use is the fib tool. Because it indicates, for me, it indicates what is a healthy pullback and a not healthy pullback. As you can see from this higher low, higher low, higher high. As you can see, price currently at this point is currently still choppy. So for me, it's still not a healthy pullback. So what price might do, let's just reverse it. What price could do is either go higher, then this could be my higher high, then I would delete this point, then measure my fib tool again, then could expect a pullback over here, continue to the upside, or price is creating liquidity on the downside, tap on some demand zones, either on this 50% retracement or the 78% retracement, then to continue to the upside. Hence, that's why I have a fib tool. As you can see, price did tap on the 50%, then continues to break higher, meaning this is now a healthy retracement for me. Hence, higher high, higher low, official higher low. Now we are waiting for price to create a official higher high. Now, where do we get an official higher high? We get it when price does a pullback. Let's just replay it here. So as you can see, we create an official higher high as soon as price, again, pulls back as a healthy pullback on the 50%, healthy pullback, then breaks this point again. But as you can see, price failed to break it. Again, this is still a valid point, the 78%, but as you can see, it went lower, fails to break it. So currently, price is not willing to go to the upside again. So as you can see, broke the structural point over here. Now we see a order flow shift to the downside, hence following again the larger time frame structure, which is super important because again, we are just trading on time frames within time frames. Now, this is the reason why I move my TP over here instead of here is, again, I believed. Let's replay it back here. So I believe instead of 15 minutes. So as you can see, we see a break of structure. So I'm expecting price to continue now to the downside. Hence, my take profit moved it on the open, I believe 5 minutes supply zone over here. Move my TP over here because what price could do, tap into it, then continue to the downside. But as you can see, it went higher. So this could continue higher. Then that would bum me out. But again, you have to rely on your strategy. There's some times where price taps into this. Let's just imagine price tapped into it and goes lower. Now, if you haven't managed your trades properly, this could be a break even. And this could be a missed opportunity to make a few dollars. And you would be bummed about it. It's the same thing on the other side. If you then move your TP here, then you would be bummed again if price went a little bit higher. It's the same thing on both sides. So you have to choose. You have to rely on your strategy. Again, there's different side. You have to be careful. This is what I see on multiple traders is they start to create reasons where they would change their strategy. As you can see, oh man, next time I'm not going to put my TP here. I'm just going to leave my TP here. But what if a different story happened at this point? What if price just tapped into it and continued to the downside? Now you would say to yourself again, this is what new traders do. Keeps changing, jumping, hopping on different types of strategy, changing their strategy multiple times at the same time or at a short period of time. Now, what if price did this? Some traders would say, "Oh, next time I'm gonna put my TP here, move my TP here." So again, you have to be careful. Have a robust, back-tested trading strategy. So I hope you guys enjoyed this video. Again, this I moved my TP here, as you can see. Not bummed about it. It's part of the game. This happens all the time, or not all the time. This will happen at some point in your trading. And remember, since I'm trading with a prop firm, I have to be also at the same time defensive on my capital, since the equity drawdown is super tight, or super tight compared to personal trading. Also, if other people are also asking, why do you have a red zone? The red zone is just a identification on a way more defined or refined OB. As you can see, it's gone the 1 minute, a way more refined OB. It's just gone the 2 minute. Okay, 1 minute, never mind. It's a 1 minute OB, more refined OB, just to give me a visual representation. Price might do, let's just say price creating a distribution. Then I could ask myself, why is price still failing not to break the structural points? Oh, it's probably wanting to mitigate a more refined zone, supply zone, to then continue to the downside. So I hope you guys learned something about managing trades. I'm sorry if I jump on different points or topics, but I hope you had some educational nuggets. So thanks for watching. See you soon. So quick update on EU. So currently, as you can see, we were not expecting, but this was a possible thing to happen, which it did. Went higher, tapped into the 4-hour supply zone, and again, tapped into our original TP over here. Again, I'm still satisfied that it moved my TP here, because according to my analysis, this is a very reasonable reversal zone. Again, remember, I'd look like the hero if what price actually did is tap into my TP, then continue way more lower. I look like the hero. But again, I look dumb now, since price went up above, tapped to my original TP, and went down. Again, what if I didn't move my price or my take profit to this zone? What if I just move my take profit here? Then what if price did this, tapped into that supply zone, went lower, then I look dumb? Then some people will criticize that. That's obviously a obvious reversal zone, or a reversal of order flow. And again, no matter what you do, there will be people criticizing it, because again, each strategy is unique, each trader is unique, each price point is unique. So thanks for watching.